Shop window in Sharm el-Sheikh. Egypt welcomes the world, promoting economic opportunity. But after 4 years of political turmoil and social upheaval, is the climate right for international investment? This is Inside Story. Hello and welcome to the show. I'm Sami Zaidan. Well, the guest list is impressive, with invitations sent out far and wide to heads of state and global chief executives and delegates from more than 100 countries. The venue, the Red Sea resort of Sharm el-Sheikh. The host, Egyptian President and former military chief Abdel Fattah al-Sisi. And the objective, to put Egypt back on the radar of international investors.
This is a moment that is witnessing great participation, distinguished participation. Government, countries and international organizations are here today. I'd like to express my gratitude in the name of Egypt. And in my name, I'd like to express my thanks to them. The meaning of their participation is or will be joint investments that will be for the benefit of all parties.
Well, the event is also promoting an image of stability after 4 years of social upheaval following the 2011 uprising. Dozens of projects worth billions of dollars are being touted to international investors, while Egypt is also pointing to a raft of economic reforms. Well, critics in the international community are also questioning whether the climate is right for investment, whether Egypt is serious about democratic change and human rights. In short, if it's safe and ready. Al Jazeera's Russell Couch helps get the discussion going.
This is the kind of image Egypt wants to promote, a hard-working and corruption-free country open for business. But Egypt's economy is in trouble. Even with oil shipments and cash grants from Gulf states, it's estimated it needs around $60 billion of foreign money, some of which it's hoping to raise at an economic investment conference at the coastal resort of Sharm el-Sheikh.
Thanks to this government, they are welcoming investors.
President Abdel Fattah al-Sisi has promised to sort out the economy. He's cut energy subsidies and increased taxes. But comments that Sisi made earlier this week will do little to convince people that he's sympathetic to the struggles of ordinary Egyptians.
Even if we don't have to eat, even if we starve ourselves, we build our nation, and yes, we rebuild our nation.
More than 4 years on from the revolution, many people already don't have enough to eat. Around 1 in 4 live on less than $2 a day. Slums have grown, and so too has unemployment. Tourism used to account for around a fifth of Egypt's economy. There are some signs visitors are returning, but the numbers are nothing like before the 2011 revolution. And this won't help attract tourists or investors. There have been a string of bomb attacks. This latest one killed 2 and injured 30 people.
When you see that some of these IEDs have targeted foreign businesses, whether they're telecom operators or other retailers or whatever they are, so it's definitely a concern. And investors would look to the government to try to give reassurance that that would be a diminishing risk rather than a rising risk.
Then there's the crackdown on dissent. Thousands of activists and political opponents have been arrested and prosecuted since the removal of President Mohamed Morsi in 2013. Success at this investment conference in Sharm el-Sheikh could move the attention away from these security and political issues. An improved economy would also bring some stability and hope. And it could also boost the credibility of the Sisi presidency, both at home and abroad. Russell Couch for Inside Story.
Well, let's bring our guests into the show now. Joining us from Cairo is Marwa Maziad, a researcher from the University of Washington who focuses on civil-military relations in the Middle East. In Oxford, Omar Ashur, a senior lecturer on Middle Eastern politics and security studies at the University of Exeter. And in Riyadh, John Sfakinakis, regional director for the Middle East at the Ashmore Group. Good to have you with us. They say ladies first, so let me start with Marwa. A lot of official excitement for sure about this conference. Tell us a little bit more about the sectors, the industries, the projects that Egypt is seeking investment in.
Well, I just arrived in Egypt yesterday, and I was in field work in Turkey and Qatar. So it's a fresh look to come here, and I found that visibly, even on TV, the advertising in the airport, all the advertising about the economic conference is focused on urban development, real estate, logistics in Suez Canal, tourism. So these are the main sectors that I think the projects are targeting.
All right. John, how vital is this conference to Egypt's economic turnaround, to this current government's plans for the economy?
Well, the conference is an important sign that Egypt is returning to the international investment landscape. The conference itself will certainly make some bold announcements, but of course, it's not, we're not expecting the conference to do everything. It's just the beginning of a new period, a new era for Egypt, an Egypt that has been troubled over the last few years, and investments have fled the country, and slowly they're coming back.
All right, the beginning of a new era. Omar Ashur, though, is the environment right to bring in investors once again en masse?
It is depends on how you state right. There are a few issues there, and quite a few issues actually. One of them is there is an ethical dimension, which is usually is not very much related to the investment and FDI. But we're talking about a country that saw enormous levels of bloodshed. So we talk about more than 40,000 detainees. We talk about more than 1,000 people killed in less than 10 hours in front of TV cameras in August 2013. We talk about many, around 18,000 injured by the military and the security forces crackdowns. Thousands, or if not tens of thousands of exilees. A military coup that really was the worst in Egypt history in terms of its human rights toll. But shoving that aside, shoving all of that aside, in terms of the stability issues, capital is usually very sensitive to the political and the economic developments. And right now, the image that is being portrayed that everything is fine. There is no political
Omar,
crisis.
if you look at, forgive me for interrupting you,
cohesions,
but if you look at some of the numbers from, for example, the IMF, it's talking about improved economic growth this year. So are some of the other organizations, Moody's upgrading their outlook for Egypt. I mean, when you look at some of those figures, is that not a sign that some of the investors have moved beyond the sort of horrible and tragic events that you've talked about?
Yeah, I don't think the tragic event I talked about concerned the investors that much, except in the issue of stability, whether their investments will be harmed because of the repercussions of such actions. And in that sense, there is a 2%, almost 2% growth. There is a 12% deficit, despite we're talking about tens of billions that were given post-July 2013 coup, invested in the country. We're still talking about around 1.8 trillion internal and external debt combined, Egyptian pounds. So more or less the idea of cheap labor and human dumping is there but it's not a guarantee that there will be some quick returns on the investments.
Let me take you back to John.
There's also the issue of the military economy.
We'll give you another chance in a second. I want to go back to John and Riyadh and say, how much of a concern is security and stability, since we've sort of got into there? I know that, you know, the IMF is talking about 3.8% growth is their expectation for 2015. But when you look at some of the other figures for security, for example, the Tahrir Institute for Middle East Policy, well, they said in 2011, for example, John, the monthly number of what was termed as terror attacks ranged from 0 to 4. In the first half of 2014, the range has shot up from 19 to 38 attacks a month. Surely that kind of security situation must be on your mind if you're an investor.
Well, let me tell you, Egypt in 2014 was the best performing market in terms of equities. It grew by 30%, and as per Morgan Stanley, this was the best country in the world. If you had invested your money, you would have made fantastic returns. And this year, the stock market is expected to do very well. It is a growing population of 90 million people. Consumer growth and everything related to the retail space will do very well in Egypt. And a lot of transactions have taken place over the recent past on private equity acquisitions and the creation of course, difficult jobs in Egypt.
Okay, but John, forgive me for interrupting you too.
Egypt is a country that is growing by close to 4%. I'm sorry. In 2013 and 2012,
forgive me, but isn't part of the reason why we can talk about
4%.
how things are looking better now because we're comparing it to last year, which was obviously a lot worse, or the previous year. The key question really is how sustainable is it if you still have major issues? For example, we'll take one figure here talking about the poverty gap and poverty rising. This is according to the Central Statistics Agency, which says poverty in 2013 rose to 26.3%. How sustainable is it going to be?
So now I have to interrupt you as well and tell you that Egypt is better off today than it was a few years back. It is on the cusp of returning. In terms of FDI, it has received $4.1 billion in 2014. That's 7% more than it did before. And it's on the track of receiving more money. And you need to be optimistic in all contexts in order to receive additional funding. The only way Egypt can recover from where it is today is to receive more investments, to be more pro-business. And of course, over the last several months, we've seen phenomenal changes on the issue of subsidies, on the issue of the taxation in Egypt. Definitely, these are monumental steps that haven't been taken before. So I think that to the testament of that, the Gulf countries are investing heavily and they believe greatly in Egypt and the future of Egypt.
Okay, let's bring Marwa back into the discussion there. John's point is you've got to be optimistic, but how much reform has taken place in order to back up that optimism with realism?
A lot of reform. I think I'm an academic, so I'm going to analyze the shift in state-society relations. Egypt has traditionally, since really the 60s, been almost locked in the situation where there is a welfare state, industrialization through the state capitalism. It wasn't pro-business, and there is a reason for that. I think Egypt was even one of the countries that maybe bypassed the economic crisis in 2007, 2008, because it was really on the periphery of the international business and the international economy. Now, I think Egypt is realizing that it cannot afford not being integrated in the world economy at the level of Turkey or Brazil or South Africa. Yet it is trying to do that without losing completely to the safety net that it had traditionally provided its citizens. So I think there is a shift, and your guest from Riyadh is illuminating how these reforms, the regulations...
But tell us some specific reforms, Marwa, if I could pin you down on some specifics.
The laws that are now, that has been drafted regarding the taxation, for instance, is inviting for businesses because it's cutting tax on huge projects. Also, it's making it, the business deals I'm talking about, less vulnerable to legal disputes and changes in government. So I've been talking to investors over the past 5 years or so. And the whole point, even before the revolution, was that the business don't trust that if they actually invest in Egypt, that there is a continuity to their deals. Someone changes in government, the level of corruption, all of that. So Egypt has been operating within a very small economic pie. And that's why I think there is, I mean, it is true that there is a proportional relation between the level of corruption among bureaucrats and the strength or smallness of the economy. If it's just a small pie, you distribute it among your peers. But when the pie is larger and you're encouraging entrepreneurship within Egypt, partnership with foreigners, but also with the promise of employment within, but also the investment of capital of the Egyptians.
let me jump in here too, Marwa. You mentioned, so far you've given me a specific, which is the sales tax. There's been a reduction in sales tax, corporate taxes. There's been an introduction of some new procedures to try and facilitate and ease arbitration. But the critics would say all these measures were drafted in a rush. They were rushed through without any parliamentary approval. Isn't there a risk here or a question here of how long will these measures stick for?
This is an important criticism, and let me tell you, as I said, I just landed in Egypt and I was watching the TV, the national TV that is always pro-government, right? But I listened to that criticism voiced on the channels that we always refer to, CBC and on TV and all these channels. This criticism is even directed from their own experts that they invite. Basically, are we going to be the victims of globalization as it has been practiced for the past, 15 years? There are problems with a big corporation that just comes and maybe the money is made and it's not even reaching the people. All this criticism is valid. But I think when you say, is it rushed? I don't think it's rushed. These contemplations have been there since 2005. But even under Mubarak, he was careful not to face the people with the kind of drastic change for Egypt to join the international business community. And I think it's risky in the sense that how far do you want to integrate Egypt without losing on all sorts of social security questions, labor rights. We don't want people to be underpaid, So
all right, okay.
These are legitimate concerns, but I think they are addressed in
They are legitimate concerns, and there are many, aren't they? Let's take a moment to try and get a snapshot of how Egypt is doing financially and what it's doing to try and encourage investment. Let's start with the plus side. Well, President Sisi is credited with carrying out a raft of economic reforms, including cuts in energy subsidies, a law cutting red tape and efforts to eliminate the currency black market. The IMF says it expects economic growth to rise 3.8% for the fiscal year after slipping to half that previously. And foreign investment doubled last year to almost $4 billion, although nothing like, we should point out, the pre-uprising figure of around $13 billion. Well, the picture isn't complete, of course, without looking at the other side of the column. Let's call it the must-do better side. Well, critics point to stability challenges after what was one of the fiercest crackdowns on dissent in Egypt's history. The number of people living in poverty has risen. Figures from the Central Statistics Agency show levels at around 26% of the population versus a little over 21% before the uprising. And then there's that damning study by global business analyst firm Ernst & Young. Now, it ranks Egypt's private sector as the most corrupt in the world. Omar Ashur, when you've got, that sort of analysis by Ernst & Young saying the private sector is the most corrupt in the world, it does make you have to wonder how much progress has taken place in the private sector to make it more attractive to foreign investment, despite what we've seen so far of an increase in FDI coming into the country.
Yeah, the crisis of transparency and accountability in Egypt is in all sectors, to be honest, including of course the state sector and the public sector, and as well as the private sector. But the strategy that is being employed has seeds of contradiction in it. On the one hand, you're trying to go the neoliberal style. You're trying to attract foreign direct investments, liberalize the economy, cuts on subsidies, more or less push the labor down and push the investors up. That on one hand, but on the other hand, you still have an arm of the state, the military institution, who still intervenes in that liberal economy, still skews it in one way or another to benefit from it, and has a package of privileges, including land confiscation rights, including no taxation, preferential tax, preferential customs rate, preferential exchange rates. and as well as other cheap labor or free labor.
Okay, but supporters, supporters might say, hey, it is a mix of trying to go military and liberal at the same time. But hey, it's working, isn't it? John was pointing out from his perspective, you know, the FDI is coming back in. The IMF saying, quote, policies implemented so far, along with the return of confidence, are starting to produce a turnaround. Isn't it working?
I don't think it works. It can work for a few months or a few years, possibly. But you know, one of the main reasons that the military removed Mubarak ultimately in 2011 was that the neoliberal policies of Jamal Mubarak and his allies were too much expanding and too much undermining the military's privileges. So once these interests ultimately clash, then you'll see the guy with the gun taking out the guy with the suit and money. This is, I think, this is the contradiction and the inherent contradiction in such a strategy.
Perhaps when we talk about contradictions within society, John, while you can look at the big picture of the macroeconomic picture and say, yes, FDI is picking up again relative to last year. Yes, growth is picking up relative to last year, although both numbers are kind of down if you compare it to, you know, before the uprising. There are some key indicators that make you wonder, how well is the wealth being shared? One I already mentioned was the poverty rate going up according to official figures. Another one is the youth unemployment rate, again according to official figures, rising from 23.7% in 2013 to almost 29%, we're told, in 2014. Are we seeing, has there been any reform, I guess is my question, to the pattern of how business is done so that it doesn't become concentrated again in the hands of a few, of an elite?
Well, you know, it's a fact what you stated, no doubt. But it takes time for these things to change. It's not easy to shift from the 3 or 4 disastrous years where Egypt was isolated, there was no contact with the international community, there was very little of anything going on. And of course, poverty is going to be impacted. So the solution here is that something has to be done with the economy, and the economy has 90 million people. It's not easy to fix. Nobody says that this is an easy economy to turn around. But if you do nothing,
John, but it's been like this
that
for
will
years,
be more
hasn't it?
disastrous. Not necessarily, because in the 2000s, Egypt was growing. As I said before, Egypt has a big population, and there were issues, there were socioeconomic issues, no doubt. But it takes time to get the trickle down, and it's not an easy thing to do. And so all we can do is expect for more investments, greater opportunities. Otherwise, you might as well shut down the economy and not do anything.
Yeah, no, but my question was the wealth gap, the concentration of wealth has been a problem that's been going on for years, hasn't it? Maybe I'll moving along to...
Absolutely, I don't disagree with you.
Right.
I don't disagree with you, and this is something that we see in many countries. Egypt is not the only country, but if we have no optimism in what they're trying to do, and if we do not try to make it more business friendly, then we will continue to see the disastrous results of other countries. Poverty is going to increase, inequality is going to increase. So at least we have a government that wants to address the issue. But there are no quick fixes. Don't doubt me.
In terms
of course,
of
in that sense. I mean.
All right, go ahead, Omar. You want to angle in here?
Yeah, I just want to say something in terms of wealth disparities. It's right, like under Mubarak, you had the growth rates reaching at some point 6 or 7%.
7.2 at one
you
point,
had
Omar.
Sorry?
Yeah, it was 7.2 at one point.
Under Mubarak in the 2000s. Yeah. So you had that. And you had this also attempt to liberalize the economy on one hand, which ultimately caused a socio-political problem. The mobilization among the underemployed and the less employed and the unemployed and the basically losers from this transition to more liberal economy galvanized in part of the galvanization, the slogan social justice in Tahrir in January, plus the arm of the state that is still have particular privileges and guard these privileges with tanks and guns. and was not going to allow that liberal economy to undermine their interests. Both of them somehow strategized or colluded together, and you saw the January uprising and the removal of Mubarak. So again, this is what I'm saying. These you can go for the 7%. This does not mean the 7% growth rate.
It doesn't mean necessarily it's going to trickle down to everybody else in the country. All right, I think though we are out of time.
So
this is a big issue. Omar, we'll pick it up. We'll pick up on it in another show. For now, let's thank our guests because we are out of time. Marwa Maziad in Cairo, Omar Ashur in Oxford, and John Sfakianikis in Riyadh. And thank you for joining us. If you've got anything you'd like to add, head over to our show page at aljazeera.com. You can post your comments at facebook.com/AJ Inside Story or send us your tweets to @AJ Inside Story. I'm Sami Zaidan from the whole team. For now, it's goodbye.